dear traders, and you're watching the daily market review with me, financial analyst of Grand Capital Company, Sergey Lyin. And our daily hearing is dedicated as traditional to the technical analysis of forex majors. And let's start our review from the first pair. It will be intraday analysis of euro and US dollar. So projected resistance at 1.4199 is under threat. Following last week's strong recovery of 1.3004, a push above 1.4199 is expected at this stage, leaving the March 15 low at 1.3004 as a potential near-term euro bear failure, and creating room for more gains towards 1.3220 and 1.3292. So the short-term downtrend from the late February highs will remain undamaged should 1.3199 cap the upside, prompting weakness to 1.3125 and 1.3085 and 1.4101 support area. Weekly chart euro and US dollar trend is bearish. Next pair, intraday analysis of US dollar and Japanese yen. We're here. The corrective setback from last week's high at 84.18 is putting pressure on support at 83.17. The 82.85 and 82.95 support area is targeted, although downside risk is limited to 82.50. A recovery above Friday's peak at 83.94 is required to open last week's 11-month high at 84.18 again. Weekly chart of US dollar and Japanese yen trend is bullish. Next pair, intraday analysis of Great Britain pound and US dollar. The 1.5874 and 1.5899 resistance area will be the main focus of attention, following last week's bullish engulfing candle. Friday's push and close above 1.5833 consigned the March 12 reaction low at 1.5599. To bear failure status, and an extension above 1.5899 is now required to bring the February 29 reaction high at 1.5991 back into the picture. The 1.5731 and 46 support area will look to cushion weakness, and only move below 1.5731 would question the Great Britain pound bullish outlook. Weekly chart of Great Britain pound and US dollar trend is range. Next pair, intraday analysis of US dollar and Swiss franc. A push lower, below 0.9141 intra-wave higher lows expected, as last week's peak at 0.9335 is isolated. The March 8 higher low at 0.9072 needs to be broken in order to confirm 0.9335 as a US dollar bull failure, which in turn would expose the February 24 reaction low at 0.8931 once more. A resistance cluster between 0.9230 and 0.9254 is expected to limit corrective US dollar gains, and only a move above 0.9254 would lift the tone. Weekly chart of US dollar and Swiss franc trend is range. Last pair will be intraday analysis as traditional, Australian dollar and US dollar. The strong recovery of 1.0423 is closing in on the March 8 lower high at 1.0671. Friday's push above 1.0586 left the 1.0423 low as a potential Australian dollar bail failure, and confirmation is now south on a push above 1.0671, a successful break above 1.0671 would then bring the focus back onto the February 29 reaction high at 1.0857. The congestive support area between 1.0509 and 1.0555 will look to cushion weakness, and only a move below 1.0509 would undermine the positive Australian dollar outlook. Weekly chart of Australian dollar and US dollar trend is range. Yes, my dear traders, that's all for today. It was me, financial analyst of Grand Capital Company, Sergey Lyin. For more additional information and analytic, you can also visit our website www.grandcapital.net. I wish you the fair trends and good luck. Bye.